discussions around crypto, like when you can set up tokenomics so it's automatically deflationary, that can often drive price in a very weird way. Well, wine and spirits are deflationary because people like to drink the stuff. Like they're not making any more of it.
You're listening to the Vint Podcast, bringing you expert interviews, alternative market insights, and exclusive access to the world of wine and spirits investing. Enjoy the show.
Hey everyone, welcome back to another episode of the Vint Podcast. My name is Brady, joined by Billy from sunny San Francisco.
You nailed it. Although it feels like San Francisco. We just had that blizzard of a century down here in Los Angeles.
That's right.
Snow in Hollywood. So we do have weather to talk about, actually.
Yeah, I saw that I saw pictures in Paso. I guess like they got it really heavy. And I saw Ridge post a picture as well.
Yeah.
Like after Montebello Vineyard, it was like several inches.
Yeah, I heard somebody describe it on the radio today as novel for Northern California, but like epic or extreme for Southern California. Yeah, there are like the mountains nearby. The snow level came really low down, so I can see a lot of snow walking around. And then like not at my house, but like up on the hills. And then like the ski resorts got like 6 feet of snow. It was kind of wild, or like nearly.
If this isn't a bullish indicator for Washington State and English sparkling, I don't know what is, that you guys are getting snow and we haven't had snow yet this year in Baltimore.
Yeah, and that we're still in extreme drought. So
yeah, crazy.
Yeah.
But the drought has ended here at Vint. We have another 11 collections qualified now, and so we've already made an announcement that we have our Margaux collection going live today. As of the launch of this podcast in just a couple hours. I don't know if our listeners jump on at 5 a.m. when the podcast goes live, but we do have that Margaux collection live on the platform now and will launch today. So that's an excellent opportunity, obviously, for people to get some interest in a vertical from Margaux, which is, you know, a really interesting value proposition when we launch especially Bordeaux and Burgundy wines in this kind of vertical format, because on the sell side, you know, later on when we go to potentially liquidate, it's a really interesting proposition for a collector that might, you know, want to have an instant collection of Margaux, or we've done Lafite in the past as well in this vertical format. So definitely an exciting offering and one we expect to have a lot of demand for again.
Yeah, I mean, it's a perfect addition if you want to just start kind of collecting all of the Bordeaux first gross. Like we've had the Lafite, we had some Mouton specific, so it's kind of cool just to highlight Margaux, and especially because the wine in Margaux, you know, they're known as the lighter style. It's like a different style of, you know, Bordeaux, even though they're all kind of similar compared to the other first gross. So some of the years that maybe one region or, you know, one producer got like a 98, they got 100 and 99. So it's like a cool little balancing act. So perfect addition.
Yeah, and like I said, adding 11 new collections based on SEC qualification for a new batch that we just received. And so I believe that brings us to 15 offerings, 14 or 15 total offerings still in the pipeline. So plenty of new assets coming to the platform over the coming weeks, both wine and whiskey, Scotch and Japanese, you know, wines from France and also the new world outside of France. And so plenty champagne. Of opportunities and champagne as well. That's right. Yep.
Yeah.
Been talking actually to a lot of investors who've mentioned the kind of booming champagne market. So it seems to be something that's transcended our little world and like also gotten out into like the broader, maybe like financial markets and alternative investor space. So unless people are really just following us very closely, which I hope is the case, but it seems that champagne is being talked about in bars around the country.
Well, I mean, the people I think are probably seeing it in the prices that they're paying for the actual champagne that's available too. Some of even the main labels are getting pricier or just not in stock. That happened a lot during the pandemic. So. Yeah,
for sure. Did you have any other notes on Margaux? And if you want to share anything else on that, obviously our listeners can see more details as well as the thesis that Billy works hard on and the rest of our team on the platform. But
yeah, I mean, this might have, I can't remember where we switched off. This might have been one of the theses that our newest member of the team who's been here now for like 6 months almost, David wrote. So it might not be me anymore. But yeah, no, I think it's just a lot of top scores. It's vertical. I think one interesting note you'll see is it's a straight vertical from, I'm pulling it up now, 2020 down through 2015. But in between 2010 or after 2015, basically earlier, what we ended up doing is rather than going pure vertical, we ended up just picking the top scores, or wines that scored really well or were highly sought after. So you'll see 2010, then 9, then 5, and 2000. So we basically picked consecutive vertical, and then we basically picked what are the top performing years outside of, you know, the most recent 6 or whatever that is. So it's kind of like a really curated approach to a vertical as well.
Yeah, and if you are a fan of Margaux and you wanted a collection of Margaux from the 21st century, this is seems like the selection of assets, you know, of the past 23 years, 22 years or whatever.
And the other
own, so.
Yeah, and the other note is this was sourced directly from Negociant Partners in Bordeaux, who got it directly from the Chateau. So wines never left Bordeaux. It was purchased direct as we can in terms of pricing. So it's pristine condition.
That's awesome. That's cool.
Yeah.
Cool. Yeah. So come to our platform, check out that offering. Obviously more coming. So plenty of opportunities to get diversified over the coming weeks. Certainly reach out if there are any questions. But on to our interview for today. We announced back in the fall and obviously have spoken about it on some other podcasts towards the end of 2022 that we raised our seed round, a round of seed funding back in the fall, $5 million round. And we actually have another one of our venture capital partners on the podcast today, Carlton CJ Fowler, who's the managing partner at Goat Rodeo, who is a generous partner for us in this round of funding and also a really strategic partner, I think, just like outside of you know, the capital that we got from them. They're actually in kind of the alcohol beverage space, have certainly a number of portfolio companies in food and beverage, and I think open up a lot of opportunities for us to network and partner as we expand our footprint in just the alcohol landscape in the U.S., navigating some of the legal issues there and helping to get a Vint marketplace off the ground as well. So certainly they're going to provide a lot of help to us over time as we do that. And CJ provides a lot of great perspectives on our side of the market.
Yeah. Just building on that, he is, well, number one, just like a brilliant guy in kind of the alcohol space, like Brady was saying, but also Goat Rodeo, they focus on, they do have a lot of investments in alcohol related projects, but then they also have in fintech investment focus as well. Yeah. So we are literally like kind of the optimal investment opportunity for them. And they really enjoyed what Vint was able to kind of bring together. And since we are a fintech company more so than a wine company.
A wine company, right.
Yeah. So it was perfect for them. But no, it was a fascinating conversation. He got to work. I mean, he did a bunch of things, but he worked at E&J Gallo for a while. And I think it was Joe Gallo that he got to work closely with, but he was basically fast tracked to the top strategy team at E&J Gallo. He was working directly with the top brass there and helping develop, you know, strategies for acquisition, for selling their wines. And for those who don't know, a lot of the brands you see on most grocery store shelves, like, I don't want to say 30%, but there's a really high percentage that are E&J Gallo. So he was basically helping drive strategic decisions for different wines from almost the get-go, for years before striking out kind of more on his own and helping develop more brands and help other companies get off the ground. So just a really smart businessman in the alcohol space, as well as, you know, he worked in tech and stuff before as well. So it's like a kind of a perfect combo for Vint. So I think it's a great conversation.
Yeah. And he definitely, like, the quality of CJ and of his firm definitely highlights the quality of all the partners I think that we were able to bring on in this last round. And so it was excellent talking to him. I hope you guys enjoyed the interview. Here is CJ Fowler. Hey, CJ, thanks for joining us today.
Happy to be here, Brady. Billy, nice to meet you as well.
Yeah, it's exciting to have our second VC on the pod. We had Matt Murphy from Montage, and now we have CJ from Goat Rodeo. Man, I'd love to hear a little bit about your background, how you got here, and some of your interest in Vint too along the way as we get into it. But why don't you tell us how you started and kind of how you got to this place?
Sure thing. And I'm a big fan of Matt Murphy. He's a very smart guy. So Vint is lucky to have him on the cap table. I am not as smart as Matt Murphy, but maybe have a little bit more of an eclectic background. That we were chatting before the show. Like, I don't know what makes up the perfect VC background, but mine is kind of weird. I've done everything from work for the Department of Homeland Security to build hotels and live in the Cayman Islands. I think the part that's probably most germane to the investment in Vint is after graduate school. I'll back up a little bit. During graduate school, I had the opportunity to intern at E&J Gallo, and it was a really interesting proposition because I knew I had a job locked up at management consulting. I was going to go do the standard like work at Bain for a while thing. So I was like, hey, wouldn't it be fun to go work at E&J Gallo and work in wine for a summer? And while I was there, I ended up kind of getting to know Ernest Gallo, obviously the current Ernest Gallo, not the founder of E&J Gallo. And that was just kind of a revelation. He's, to this day, the smartest person I've ever worked with in wine and spirits. I mean, he's a certified genius. And you could even tell all the way back then that he had a different view for what he was going to do with the company that he would ultimately helm. And he's the CEO currently. So when they offered me a role there, at first I said, no, thank you. I just didn't really imagine enjoying being like an associate brand manager on Barefoot. It just wasn't my path. And they said, no, actually what we'd like you to do is report directly into Ernest Gallo. And eventually, kind of ended up running a team on new brand development. We had a really big focus on the spirit side there. Because again, Gallo, largest winery in the world. I don't think people realize how big it is, but one out of like every 3 or 4 bottles in the U.S. of wine is a Gallo bottle, whether you know it or not. And they're just giants in that field, which means they're incredibly ingrained in distribution and retail and category captainships, et cetera. So it made sense that because they had so many fixed cost investments, that they deserved to be big players in spirits. Now, deserve and achieve are two different things. And that's really where I just give a ton of credit to, both Ernest and the entire organization there, because it's incredibly kind of culture and character rich, but had the opportunity to take a step back and just think about what made brands successful, understand the capabilities of that organization, and try and merge the two. And we did a really good job. And when I say we, I mean a lot of people. Success should have many fathers, but that team put out High Noon. That team put out a lot of the stuff that, is just taking names and kicking ass for Gallo right now. And last I checked, Gallo is now the 4th largest spirits provider in the U.S. now too. Number 1 in wine, number 4 in spirits. And High Noon is now officially the largest spirit by volume in the U.S. market. And that's just a couple of years after its launch. So learn from the best in a very idiosyncratic manner that didn't have a public master as far as the markets and having to report out quarterly earnings so they could take a very long view. So I give a lot of credit to both Ernest specifically and that organization in general for where I am now. And I guess after that, sorry to go so long, guys, but after that, I left. That was around 2017, 2018. I wasn't entirely sure what I wanted to do. I did some consulting for a while for many of the majors, all very quietly and all very NDA'd up, so I won't go into too deep, but worked on building brands for them, as well as doing some stuff for Coke and Pepsi. And then I realized that I am temperamentally ill-suited for client service. Which is like a really nice way of saying I kept firing all of our clients because sometimes they would have in my opinion, stupid requests. And my partner, James, obviously was kind of concerned about that because that was supposed to be our livelihood. And then I kind of suggested that perhaps instead of giving advice and then an invoice for said advice, our incentives would be better aligned if we gave advice and then a check to go execute on that advice. So we raised Fund 1 in 2019. That was a proof of concept. Can't believe that LPs actually believed in us. Remain grateful to this day. And then it kind of spitballed or snowballed from there. Spitballing would be kind of gross. And the funds kept on getting larger. We now have about $50 million under management, which is small for a VC, but swings a big stick when you focus on alcohol and beverage in general as much as we do. And here we are today on the Vint Podcast because that was one of the coolest things I've seen in a while.
Wow. Yeah, that's like a really interesting approach because most of the people go through, and if they work at E&J, to your point, they either come up connected inherently to like one brand or one sector. It's not really that you get that kind of access to either Ernest or have that like kind of broad scope to kind of help develop on a more macro strategy scale.
Oh,
That's
yeah.
Really interesting.
I am just completely cutting in line. Like you should have to work at a company of Gallo size for 10 years before you run innovation. Didn't cut in line. And you should have to like be an analyst and then an associate and then a principal for years before you're a partner in a VC fund. Didn't cut in line. But I was also too old to do that. And so this was the only option in. And don't think that doesn't mean I've made a lot of mistakes because like I'm constantly learning things that like someone who was an analyst and then an associate and then a principal would have just learned on the job. So that doesn't mean it was the right way. It just is my way.
Yeah. What's the, I mean, you haven't, I guess, made too many investments outside of beverage and alcohol, but what do you suppose are the most unique things about participating in this niche versus maybe someone who's, a SaaS or some kind of just like kind of tech VC? What's unique about the niche that you're in? I
mean, the first thing I'd say is Vint, while it presumably sells wine and spirit, is actually a fintech. I'd say a third of our investments are in things that we kind of consider a broad bucket of technology. And while I am not a technology investor, I have enough experience in selling widgets to know where there are things that can be fixed. So I'll tell you, I am as attracted to Vint for the future ability to bring the in Premier system to Napa and Sonoma, or the ability to create liquidity, amongst the import, system, than I am for actually securitizing wine and spirits. And so a lot of what we do on what we call our tech pillar, which is now a third of the size of the fund, is where are problems that we have seen for long-term periods, whether it's in a government-mandated three-tiered system or not. Like we have investments in things that apply, machine learning to making distributor routes more efficient. We have investments in things that help, grab first, second, and third-party data and help all these companies that, during that D2C Cambrian explosion that happened in 2020 and 2021. Well, now they've all figured out that it's better to ship pallets than it is to ship boxes, and they all want to be on shelf, and they don't know how. So as we go forward, I wouldn't be surprised if that ends up being half the fund. But to your specific question, Brady, like investing in wine and spirits, it's helpful to have a background in it because it's a very insular system. It is, in the worst term of the word, an old boys club, and that's something obviously that we're trying to change with some of the founders that we back. But at least we do have a membership card in that club, for better or for worse, and that helps us navigate a lot of the pitfalls there and helps us help the portfolio companies navigate it.
Yeah, I think there's so many things that are wrong, and we'll get into it a little bit more about like the traditional alcohol system, which is one of the reasons why Nick and Patrick's vision, enticed me to join as well, even when they didn't really have anything or were qualified yet. One quick question. I had to Google what a goat rodeo was, and then I should have guessed because it's like herding cats, I guess is a similar saying. But how did you guys land on that? / it's an awesome name.
Well, I mean, so there are kind of two answers to that. And I'll tell you the official answer, which is, we like to work with early stage startups. There's an awful lot of chaos there. When there is something special about a company, that tends to be one or two things that you can see that might be able to scale all the way through to to exit velocity, and the rest is chaos. It's like we could have easily just called it thrashing duck capital, because like that old saying of like a swan or a duck is calm above the water and below it's just absolute chaos with their legs stripped. It's the same thing with startups, and you guys are well aware of this. Is things appear maybe smooth on the outside, and even in the most successful, it's chaos. It's a goat rodeo. The real answer is, one, I grew up in a very small town, and so like goat rodeo was a phrase that I used a lot. But two, like I care deeply about brand. I care deeply about positioning and communication through that because of my background in brand building. And every other VC fund either calls themselves something that sounds like it could easily be the next Toyota midsize SUV, or it's a piece of nature with a color, black stone, black rock. I mean, come on, guys! Like, come on! I'm not I wasn't going to call us Green Moss Capital, and calling yourself something like Goat Rodeo makes you ask that exact question, which is, tell me why the name. And that's what a good name does in brand, and our brand just happens to not be a CPG thing; it happens to be invested in CPGs.
When I saw you guys kind of come in on the cap table and Nick was talking about y'all, I was excited that you guys were so focused in this space because, like you said, all the different opportunities that we have coming down the line to, even as we build our brand, to expand outside of just securitization, which will always be the focus of our business, but so many opportunities in this space. What kind of stood out to you about the long-term vision? I think you might have already started to mention a little bit of it, but what stood out about the long-term opportunities with Vint that maybe makes them stand out among other portfolio companies?
I mean, I'll start the meticulous nature of Nick specifically is like in many ways can kind of almost hide, I think, the raw simplicity of the idea, which is that bells and whistles aside, this is an excellent asset class. And I think Nick saw a very important consumer insight, which in this case, your consumers are almost exclusively through time, especially in early stages, going to be high net worth family offices and eventually institutions. And those people don't want to own things. They want to own pieces of paper that say they own things. We can put this entire, like, I can't tell you how many people I've explained to Vint, because I live in a weird bubble here in San Francisco, and be like, oh, well, when's it going to go on the blockchain? And I just have to sigh and say, it'll go on the blockchain when family offices demand for it to be in the blockchain. But right now, the SEC is the blockchain. And Nick's ability to navigate that successfully and in a repeatable process was extremely attractive. And his understanding of who his consumer was. Now, there's a lot of work to go out and try and find those people where they are. That's the whole process of company building. But he had a core insight that he understood how they wanted it and what they want. And then I think that doesn't require necessarily a background in wine and spirits to understand. What does require a background in wine and spirits to understand is that, like, in wine and spirits, there are just a couple banks that matter. Like, in the Valley, I'm looking at the Valley, it's just right up that way. Like Silicon Valley Bank banks 85% of Sonoma and Napa. Like so, knowing that there's going to be an opportunity to work with them to potentially bring additional securitization tools, whether or not that is in the final form of Imprimeur, like France does it, like almost doesn't matter. There's $200 billion of wine that needs to be securitized in one way, shape, or form because there's working capital locked in those two valleys. And I just think that Nick's understanding of that process allows him to see a vision that helping free that capital will not only help all the small wineries, it'll help the big ones, and it'll certainly help Vint. And they're markets that I think might end up being orders of magnitude larger than the securitization of the more higher end names and the LiveX based stuff. And same for this whole idea again of where is working capital locked. Like, if you have a background in wine and spirits, you know that companies like Shaw Ross, companies like Opicha, these major behemoths of American wine importation, that service names that we know are bankable. Like we know that certain levels of French and Italian imports, and to some degree some South Americans and some Australians, like those invoices are good as gold. And Shaw Ross is Southern. That's good as gold. So getting in there and unlocking that working capital in a way that no one else is doing is fascinating. And that's why at some point you should have, I've introduced Nick to the head of Southern's venture arm. You should definitely have her on at some point as well.
Nice. Yeah.
But that's to your question of like, hey, how does your background help you understand this? I think a lot of folks can understand that wine and spirits should be an asset class, and that's great. And hopefully that drives a very large market. I think we spend a lot more time when we're thinking about Vint and trying to help Nick thinking about those other two things that you need a background in to understand the players.
Is it more attractive or potentially riskier on your side that we're the first in this space here in the U.S.? Maybe globally, I'm not sure, but
I think it's more. I mean, it's neither like first or second or 10th. I would have picked the one that demonstrated a very, very good understanding of how to work hand in hand with the SEC, because it doesn't matter which of these products end up popping up, they all need to be papered. And then that paper needs to turn into a platform that has good UX UI. And step one is papering, and that's I think what Nick has clearly proven he's able to do. He's also proven that there's consumer demand for it. It's not that I'm indifferent to that, but many people could have proved consumer demand, and there are some competitors you guys have that have some consumer demand. I don't care because I don't think that they're approaching the market the correct way.
Yeah, I like that saying too, like approaching it the right way, because it was interesting. I originally came on because Nick and Patrick had reached out to me to write some blogs because I'd done some wine writing. And then once they explained their concept, it was kind of like what you were saying. Is like by the time they were done, I was like, I will write these blogs, but can I also like invest in the company? This was a long time ago, but I was like, I'd only worked in wine and spirits for 5 years, and I was like, you were seeing these problems that I've railed against for a while, and you actually have some solutions. I thought it was fascinating, so I definitely agree on that front. From your broader kind of brand building side of things, do you see like the direct to consumer and kind of, I guess, value of certain wine brands kind of continuing to drive the wine awareness that will lead to more investment, I guess, in something like our product? Or do you think some of these lower tier wines devalue our asset class in some people's minds?
I think that I think that Vint is fortunate that it will be able to build quite a bit of its success on the idea of brand, and I think in finance and especially when you're dealing with like high net worth and family office, maybe a little bit less institutional, the psychological aspect of what you're working with is almost more important than the actual numbers and facts you can put on the board. Like this idea that like, hey, no, we're primarily looking at, first growth Bordeaux, these Burgundy houses, these Italians, these champagnes, these whiskeys. You're able to basically piggyback on brand building exercises that lasted for more than 2, sometimes 3 centuries. I think it's terrific that exists because it becomes a self-fulfilling prophecy. Like, at its core, like people drink these things, going back to the sometimes nonsense discussions around crypto, like when you can set up tokenomics so it's automatically deflationary, that can often drive price in a very weird way. Well, wine and spirits are deflationary because people like to drink the stuff. Like they're not making any more of it. And like for example, I've got some stuff in my cellar that like I'm constantly having to go through an exercise of not drinking too soon because it looks delicious, and A, I know it's not ready, and B, I know that I could probably sell it for a lot more than I bought it for. And that urge is timeless and will always create value in this asset class. And specifically that urge, some of the stories I've heard from Psalms over the years of like people who worked in like Maxine's, in the in the 80s when folks would Japanese businessmen would come in and order like pre-war Latour vintages and also order a Coke. And there's all that person's always going to exist, and they're always going to eat into the stocks, and that's always going to drive value.
Yeah, I think I reference this on the podcast all the time, but the story of wine by Hugh Johnson it basically goes back like 5,000 years, and people talking about certain vintages that just drove, people coveted certain wines always throughout time for like literally millennia. So I think you're right. I think it's an inherent, almost human nature thing that won't go away.
Like, to answer your specific question, do I think that there will be alpha in technically, it's funny, I just sent an email to someone about this. I'm probably butchering the name, but Pape Clement is right next to Haute Brion. I put Pape Clements in my cellar as fast as I can because they cost $100 a bottle and Haute Brion costs $540 a bottle. They're literally right next to each other, and they often have the exact same scores. So is there alpha there? Probably, but do I think from a customer acquisition standpoint, it's a lot easier to get people to buy a collection of Haute Brion? Absolutely, and not losing the forest for the trees. And just understanding that these brands exist and always will, I think will serve it well, rather than trying to create alpha somewhere else where it might not, especially in a nascent asset class, exist immediately.
Fun fact: the Pope Clement, he was one of the driving factors in bringing the seat of the papacy over to Avignon. He was a French guy who actually had been based in Bordeaux. He's the bishop, and he just some people say he liked French wine so much better that he brought it over so he could get it, his Bordeaux and his the Rhone Valley wines.
It's funny to mention that because the first time that I picked up a bottle, I thought it was merchandised wrong because I was like, hey, here's the keys. And I was like, this is definitely not a Chateauneuf de Pape. So what's going on here? Because those are the only bottles that get to have the Pope's keys. But you are correct.
Yeah. So I guess what I was also asking, it's interesting because on that one end, brand is driving things. But I was asking, I guess, for a sense of the American wine consumer is a little further behind the average American wine consumer. And what they're seeing is a lot of these mass market brands. And I was thinking, does the quality of those mass market wines lead the broader market to kind of look at our asset class as something that may not be as valuable as maybe a European consumer would inherently understand?
I mean, I think similar to fashion and even automobiles, and in a lot of things where there's as much a science as an art, time tends to matter on brands. There's not going to be an American company that passes LVMH anytime soon, and I think that I'll turn the question back around on you. It seems to me like the Colt Napa collections sell very well on the platform, and it's not like a bottle of Screaming Eagle's ever going to hit the shelves in a grocery store. It's all spoken for the second it goes into bottle. So I think the American market can continue to evolve, but I also think that, and this is going to allow some subjectivity into it, which is my own palate. On average, at least what I've seen anecdotally, is the more involved one becomes in wine, the less attracted one becomes to the extremely extracted and heavy fruit forward, heavy alcohol basis of Napa, unless you're trying to demonstrate something extrinsically. So just in general, most wine aficionados that I know go through a process where they learn about it, probably go Napa first, then discover parts of Sonoma, and then ultimately become primarily Italian and French drinkers, simply because their palate moves there. So I don't think it's so much that the consumer nature of the American market in wine is blocking the elevation of those vintages as much as there's just so much of history and wine making style and brand woven into that Napa's done pretty well for only doing it for less than 100 years. So to really answer your question, we need to be asking someone in 2300, not 2020.
Well, I guess I was trying to see, how do I convince somebody who thinks wine is only in America, that thinks this $10 bottle of wine that they drink is what we're investing in? I guess it's kind of what I was getting at. It's more how do I get that person to invest if they have the money? But I guess most people have a general sense. They've heard of, at least fancy champagne and stuff. They have a concept that wine can be valuable, and they know that what they're drinking isn't. I guess that's what I was thinking, is like, how can we move them to view wine as an asset class and kind of develop it further rather than just a everyday consumable?
I think that begs like a substantially deeper discussion around the distribution of investment knowledge. I would argue that convincing that person is maybe impossible with the resources that Vint has, but convincing that person's registered investment advisor at some point that it is an acceptable investment is a much more targetable and achievable goal.
Yeah, that's an issue. It's an issue that we not only experience, but the company that does what we do with luxury watches or handbags or any other luxury item, that the majority of middle-class folks just think, oh, that's just stuff that rich people blow money on, versus those are assets that appreciate, and owning physical things is thumbs up.
Yeah.
I think that's probably a broad issue of skepticism about those things, and self-assuredness about maybe like public equities or some of those more traditional investment vehicles. Yeah.
I mean, I think you're talking about forces that can often take a decade or more, and we have a pretty clear path of what they've been before. Like you need platforms to exist that make it accessible, and you guys are working as hard as you can on that. And then after that, you need time and media to convince people that it's an asset class worth going after, and also some form of expert voice. If this was a podcast about pharmaceuticals, we'd be talking about how you use doctors as a dissemination platform. But because this is wine and it's investment, getting Morgan Stanley Private Wealth on board is important. Getting Charles Schwab 5 years after that with the registered investment advisors that they talk to will eventually be even more important for the longer tail. But it's a process.
Yeah. And I read on your bio on the Goat Rodeo site that you spend a lot of, probably more energy than you'd like to, being upset about the 3-tiered system, like most of us. What are the main effects of our current system of distributing wine and spirits around the country and to consumers? What are the main effects of that, you think, on the markets broadly for consumers and maybe for our business? Well,
there's two competing ideas that I'm able to hold in my mind at any given time. Like the over time, the fact that the middle tier, being the distribution, has largely consolidated, has made the system antagonistic to new brands. Now, that's also one of the reasons that new brands, especially in alcohol, get such eye-popping acquisition numbers based on a multiple on revenues, because you want an antagonistic system. And therefore, the presumption is when you move into someone who is, someone acquires you who is not being antagonized by said system, the growth will continue. And we've seen that time and time again. The flip side is, if you look at the European market, for the most part, which is the other place that, like at least for the Western market, and we could have a whole different podcast around how the Chinese market for both wine and spirits is developing. But like the fact that they don't have Tide House, has actually made their innovation engine worse. The fact, to explain to your listeners, Tide House could mean that like a supplier could own the brand and maybe the bar that it's served in. And there also tends to, and as a function of that, there tends to be big conglomerates of on-premise, points of distribution in Europe. Whereas, and this is something that I, learned from Ernest, the fragmentation that has happened, at least in the U.S. market, in the retail aspect, is helpful for innovation. The fact that you can start a brand and walk into a bunch of independent retailers in a state that might be heavy on independence is a good thing. It means you might be able to get your new beer, your new wine, or your own spirit on a couple shelves and get some feedback. Some states like California, extremely chain heavy. You as a new person cannot go get that. You need a distributor to help you get that. You need a lot of money. So I think on the one hand, it's a cartel, and it's a cartel that is primarily in the service of the middle tier, and that it manufactures profits that otherwise would go into a consumer surplus and a supplier surplus. Like And that for Southern to have its cut, you had to lose money and Gallo had to lose money. Now, I'm sure that reasonable minds can differ on that, but that's that's generally what happens when you have regulatory capture. I think that over time that'll probably get moved away, since its primary reason for existing was effective tax collection. And last time I checked, Amazon's pretty good at collecting taxes on everything that I buy there. So I'm not too concerned over time, but it'll just take longer than anybody thinks to change, because there's a lot of lobbying dollars sloshing around to keep the system exactly how it is.
Can you touch on how you think our model can help with that, breaking that a little bit with our importation and potential sales?
I mean, that's I know what you're asking, and very honestly, the fact that this system exists is a good thing for you. The fact that Shaw Ross is massive is a good thing for Vint, because Vint has, less players to go in and try and implement an idea of factoring invoices and unlocking working capital. So you'll be able to help the most small wineries the quickest, because the 3-tiered system exists. Mm-hmm. And then over time, hopefully that makes more suppliers strong and not need distributors, and have more choice about who they go to distributors, which will naturally refragment the market, which will naturally give you more distributors to go and importers to go work with. So you can hopefully be somewhat of a counter cycle for good, because working capital is such an important aspect, especially in wine, when you are literally putting things in organic barrels and waiting for the final, in spirits even more so. But being honest, Vint should be thankful that the cartel exists, because it gives you someone to go negotiate with.
Agreed.
Are you kind of pivoting a little bit to like your own interests in wine and spirits? Are you more of a wine guy or maybe whiskey guy? I think you maybe said in the beginning you were more involved with spirits, or what's sort of your go-to?
Professionally, I've always been involved in spirits. Personally, I don't get me wrong, I love a good Scotch. And I love, there's some bourbons that I care for, but I'm much more a wine drinker.
Oh, nice. And what are you? You said that the palate usually moves.
Yeah.
Across the pond. Is that right for you? Or
it is, yeah. With the there's certainly some producers in the U.S. that I love. I love Ridge. There's some cinema things that I do quite love, but for me, Burgundies, white or red, are very high on my list. And I'm slowly trying to teach myself more and more about Italian wine. It's a wonderfully fragmented system that seems to adhere to neither grape nor terroir as far as its nomenclature and taxonomy, but it's fun to learn and it's fun to drink. And I whenever people ask me for wine recommendations, separate from like very pricey stuff, if you've got $20 to $50 to spend on a bottle of wine, you are not going to do better than just walking into a decent wine store and paying $30. It's just, you're going to get better wine for $30 because the Napa wine it's very highly marketed. Like I can tell you as an investor, the number one thing that I look for in a wine brand to invest in is, can you be non-appellated, non-vintage and sell for $25 to $30? And that makes for a very good business. It doesn't necessarily make for a very good bottle of wine. And so you're much better served walking in and getting some unknown French producer that someone at K&L has decided is worth importing. It's probably going to be fucking delicious. I don't know if we can swear on this podcast. I'm sorry. You can edit it out if not. But it's going to be great. It's going to be the best $30 you've ever spent.
Yeah. We were having the non-vintage and non-appellated conversation the other day with a producer from the Central Coast. And then also we had the Penfolds team on it, which I think the Penfolds is an optimal example of both a good business and a high quality wine, because they're able to, create that high quality every year, but aren't restricted.
but they can push the price up. So, the second best business in wine is if you can get above that $50 price point and start to stretch, and you are constrained by, then the size of your business is constrained by, by production, things like that. But like the reason that Prisoner is like a perfect example of what I would try and invest in as a wine brand is because it is virtually unconstrained by supply. That is why you want non-appellated, non-vintaged, and then you use a lot of winemaking techniques to create consistency. But the reason that people buy Prisoner isn't because of the wine. Now a lot of stuff went into that. Like, it just so happened that there was a tremendous amount of delicious Zin available when Prisoner started, and not enough people were introduced to Zin, and the American palate is particularly well suited to something like Zin. If you love big Napa cabs, and I give you a Zin with a really cool story, you're going to think that's pretty good. Like, to this day, when I like every time I bring home wine for my parents, if we're having like Thanksgiving or something, I always make sure to throw in like one Dry Creek Zin for my dad. And he'll taste all the wines and be like, I really love that one. I'm like, I know, because it's the Zin. And you're basically just getting like a fruit bomb. But
where in Italy have you been looking? Are you going to more northern first?
Yeah, I am. I although my wife, like, if she could just be hooked up to an Etna Rosso IV, I think she would.
I'm with her on that.
So, she's a really big fan of kind of like the lively, really minerally reds, and that tends to come from the south. And I love them too. Don't get me wrong, but I tend to get a little bit more northern.
Yeah, the way that if you're a Bordeaux fan and also Burgundy, I feel like Piedmont, like some of the Barolos is going to be right up your alley. Yeah.
Yep. And again, they're just, the quality you can get for $1 there is it's tremendous. Yeah.
It's funny. Some of the feedback we get on collections here on the platform. You mentioned, you like everyone. Well, I love Burgundy. I think everyone loves Burgundy, but people have come to us, and we had a white Burgundy collection in the spring of last year, and it took a little bit longer than some of the others around it to sell out. And I was speaking to investors about it, and they're like, yeah, well, I didn't even know that you could age white wine. And it was actually one of, in my mind, was one of our better value propositions in terms of our investment thesis and sort of the circumstances around that vintage and like all of those kinds of things. It's just funny what catches on and what doesn't, I think, just based off of common knowledge and name recognition. Mm-hmm. And yeah, I didn't even know you could age white wine. So that's been fun, kind of having those conversations with folks.
Yeah, once you have, in my opinion, once you have a really good white Burgundy, the idea of ever drinking another Napa Chard becomes kind of like a bit of a terrifying proposition. but there are a lot of people who really dig malolactic fermentation, and so Napa's got that for them,
Oh yeah, diacetyl out the wazoo. Yeah. But to the same point, if you do taste a really good white Burgundy and you taste one with a little bit of age on it, then you also ask, like, why don't people age more white wines? If they're made right, because you don't want to drink one of those babies. Awesome. Well, I was also going to say, looking forward in terms of like trends in 2023 or beyond, since you're so tapped into the kind of alcohol space, what are you looking for in the next year or 5 years that might be catching on?
The build in sparkling is continuing, and like if you talk to I run into folks sometimes that like don't fundamentally understand how trends build, because they're kind of like, if you think of trends as a wave, they're going to be these little eddies and counter waves. Everyone's like, oh well, a lot of the growth in sparkling is in lower end sparkling. I'm like, yeah, but that's like, think of it as a customer acquisition funnel. Like, the top of the funnel matters, and at the bottom of the funnel, people are going to eventually, some percentage of that top of the funnel is eventually going to find their way to, really beautiful aged champagne. And so I think that 5 years from now, if I were, this is not investment advice. My lawyer won't me to caveat that, but I'd be snapping up anything on the champagne side, because I think that, I read an article where I think we passed $6 billion in the worldwide champagne market, and I was like, that's almost comically low. It's gonna. I think we'll be having this conversation in 5 years, saying we're about to pass the 20 billion mark, because it's, people's palates love carbonation. They love flavor. They love something that is approachable. And when you start to move away from this is only for, solitary, celebrations a couple times a year, people are going to start, pairing it with food more. I just think that champagne is going to continue to be an unstoppable trend.
Yeah, for as much soda as we drank for so many years, you think that we can just easily convert that appetite for, like you said, carbonation too.
Yeah. The thing that I'm keeping my eye on is that the millennials have done everything late when you look at like actual like consumption trends. So I think the expectation is they may come to ultra premium and up wine a little bit later. They have been the driving force between ultra premium spirits. I mean, the boomers and Gen X, like, because they still have so much disposable income, they're a driver there. But if the millennials come to ultra premium wine late, I think they might come in a slightly different way. I think like just an absolute adoration around, in the U.S. market of very extracted Napa Cab and a very certain style of Napa Chard. Those will always be major players because you can't have a category completely devolve over time. But I wouldn't be surprised if we see the growth in a lot of other things, within the wine. Assuming that millennials show up to the party. If they don't, then you have to kind of reach up and say, okay, interesting. Like we might have a much lower consumptive class and one of the biggest drivers of wine consumption in the world. And we'll just have to see. They've come late to everything else, buying their own houses, having their own kids, getting rid of their student debt. So I suspect that they will come, but everybody needs to be watching that.
And then in your personal wine drinking, are you snatching anything up besides sparkling, or exploring new regions that you want to drink in 2023?
I would love to go. I'll answer that question kind of in a trip that I'd love to take. I'd love to go do like a Sicily, Sardinia, Corsica, maybe one other, and just like really explore the island wines. I don't know Greek wines very well at all. I feel like that's a separate trip, but I'd love to go just do the, some of the near coastal stuff in those three islands and really get my head around the water, which would allow my wife to get her hands on a bunch of Vintner Rosso, which would make her happy.
Yeah, no, I'm with you. We were actually considering a similar trip, but Sicily has so much in and of itself, and then Sardinia and Corsica, like I think Corsica is more for like their Vermentino, and they have but the wines have mutated over the years. Sardinia has Cananao, which is just Grenache, but it's also evolved. Like it's so cool to think that like there are literally wines that those cultures are kind of centered around that we rarely see and we would think are weird, but they're just like have crafted them over the course of like hundreds of years to make them special in the way they are.
100%. And I'm way more like, I love Vermentino. I'm way more interested after White Lotus. My guess is Sicily's going to have way too many people for a while. Mm-hmm. And maybe I need to go spend my time in Corsica or Sardinia.
Yeah, I think Sardinia is probably. I don't know as much about Corsica, but I was thinking about Sardinia too. I think that's probably the move. Although I will say the economy in Sicily did need a little bit of a boost, so hopefully it'll be a good boost. So that makes sense. Cool.
Awesome. CJ, really appreciate the time, both in sharing obviously your insight about the industry and your experience, but also kind of what drew you to Vint and what has you so excited as we are. So
I think you guys are building a really cool product, a really cool service. And I've got very, very rosy expectations for y'all. So keep up the great work.
Awesome. Thanks so much.
Yeah, we'll talk again soon.
All right. That was our interview with CJ Fowler. I hope you guys learned a little bit about the wine, alcohol, and kind of brand building biz, as well as his point of view on fintech and where we're going with that. And yes, today, as we mentioned, launching our Margaux collection. It should launch at 12 noon Eastern. go grab some shares. Hopefully you can grab some before they sell out this time. And otherwise, we'll be back with another episode next week. Cheers.
To check out our current offerings and to sign up for the Vint platform, find us at www.vint.co. That's www.vint.co. For questions, comments, or feedback on the Vint podcast, please email us at support@vint.co. Vint and VV Markets are offering securities pursuant to Regulation A. Our offering circular as amended can be found on the SEC website. Past performance is no guarantee of future results. Investments such as those on the Vint platform are speculative and involve substantial risks to consider before investing. We may provide communication that may contain certain forward-looking statements that are subject to various risks and uncertainties. Information provided in any communications, including this podcast, is not legal, business, or tax advice. All prospective investors should consult a legal, tax, or business advisor concerning the subject matter of any communications and any offering.